Focus. Ideate. Innovate. Enable.
Hello and welcome to a brand new season of NSE FinWiz powered by CNBC TV 18. Last season we travelled across the country and stopped over at 20 companies and met their young professionals who were given some sound financial advice by our experts. And this season we're back bigger and better than before. On this opening episode of Season 2, we're at the Pune campus of one of India's leading consulting and business re-engineering solution providers, Tech Mahindra. Founded in 1986, Tech Mahindra is an Indian multinational provider of information technology, networking technology solutions and business support services to the telecommunications industry. The organization has operations in more than 30 countries with 17 sales offices and 13 delivery centers. This prestigious organization has over 9,200 professionals across 51 countries and provides services to 632 global customers. Tech Mahindra's vision is to consistently achieve top quartile growth by contributing to their customers' success. Tech Mahindra also believes in making it possible for the employees to realize their potential and work towards generating value-driven services for the stakeholders. Tech Mahindra is a part of the Mahindra Group that employs more than 180,000 people in over 100 countries. Focusing on our theme for the series, NSE FinWiz visited the spectacular campus of Tech Mahindra in Pune to gauge the thoughts and notions of the young employees on investments and financial planning.
I used to invest in FDs, but later on I came to know that the returns are more in share market and the mutual funds. So I started investing slowly when I started earning. So I started a little bit amount every month, keeping it aside and investing in the share market and the mutual funds.
I always wanted to know about what mutual funds, how mutual fund works, because I have seen people investing in mutual fund on a large number of amount. They have whatever money they are investing in mutual. So I want to know what exactly how mutual funds works.
Investment is like the saving potential which can be multiplied, because whatever the amount of saving capacity you have, if you put it in the right investments, obviously it will have a more possibility to grow. Because when you have suppose a 1 lakh of amount, you should not go get invested into one particular segment. I think it should be diversified investments. When there is a possibility of investing in something called land, you can invest there. When you don't have that much of amount, you should look at other options. Investing in gold for some amount and invest in stocks for some amount and some for fixed deposits, which will have secured and safe amounts of returns.
I would have to ask them that since I'm a fresher and I have joined and started earning right now, so I would like to know that what would be the best plans for me to invest so that I could get a maximum returns and could reap out the maximum benefits out of what I'm investing into.
I haven't invested, but I do have some idea about investments. Like we have mutual funds, we also have PPF, FDs. We have a recent recurring accounts. We can invest in that. So we also have options in stock exchange. We can invest in shares. Gold is one of the options because people invest in India. Most of the people invest in golds, and my parents invest in PPF and FD, which I'm familiar with. But I haven't invested in anything yet. So I think if I'm going to invest, I'll do an FD or a PPF.
Well, I'm now joined by two very special experts. First up, we have Mr. Harshvardhan Rungta, who's a CFP at Rungta Securities. And we have Vijay Chabaria, who's a CFA charter holder with Prudent Investment Advisors. Thank you, gentlemen, for being here. Harsh, first question to you is, let's talk about starting investing. There's always a talk, people say that, it's good to start investing early. Is that true? And why?
Let me explain this with an example to you, a financial calculation, very simple calculation. If you were to invest 1,000 rupees for a period of 30 years in an equity asset class, okay, which generates, say, about an average return of 14% over the next 30 years, the amounts that you will accumulate after 30 years would be around 54 lakhs. Okay, and the same person says, I have just started, let me enjoy myself, let me get 5 years down the line, I will start making the investment. So 5 years later, this gentleman starts making the investment with the same 1,000 rupees, but he has, say, 25 years now, because he's not invested for first 5 years. What is the corpus is likely to accumulate after 25 years, vis-a-vis another person who's invested for 30 years? The figure that he will accumulate after 25 years is going to be 26.5 lakhs. Against a person who started 5 years earlier and he's accumulated 54 lakhs. So just 5 years of delay has basically eroded your corpus by 50%. That's the power of compounding.
Vijay, okay, so let's look at this. He's spoken about this, you know, everybody is worried now that I should have started earlier. We can't turn back time. What is it? How should we start investing immediately then? It's never too late, you would say?
Sure, it's never too late. I think the first things you need to do is look at protection. So you need to have a contingency reserve of about 3 to 6 months of the amount you earn lying invested in an ultra short-term fund, which earns you a little more than a saving bank account. The biggest income-generating asset is yourself, right? You need to ensure your health. You need to ensure your life. You need to have adequate protection for your family. So these are your protection needs. If you haven't had the time to sit with a planner or an advisor, it's never too late to start. You need to basically have goals in life, which are basically your responsibilities and your aspirations. So it's as simple as saying that a person without goals, it's like you're setting sail into the high seas, but you don't know what your destination is. Basically, that's the way you need to do it.
So the fundamentals, basically goal setting, asset allocation, and monitoring it. So I'll get back to that. But before that, if anybody has any specific questions, maybe we can get you guys in also on that. Harsh, let's talk a little bit about asset allocation, but by way of, everybody is confused by what are the main fundamentals, what are the main contents of how I can put my money in which vertical. There's equities, there's gold. So just talk a little bit about that.
We've all learned something from our parents. Don't put all your eggs in one basket. So that theory holds good even today. What is important is, if I have, say, 100 rupees to invest, how much should I put in equities, how much into debt, how much into probably precious metals, and if at all we could include real estate into our portfolios. So the bigger question is, we know we need to allocate our assets into different class of investments, but how much? Now there are thumb rules, okay? I'm not a fan of thumb rules. The thumb rules say that 100 minus your age should be in equities, okay? But if you look at it, if you have an access to a financial planner, or if you get a little more detail into your own finances, you will see that two different people have different requirements. Say two people who are 30 years of age, one person has only retirement as his goal. So he has time horizon, which is, say, probably 25 or 30 years from now. The other gentleman who's 30 years of age, at the same, in the same department, earning the same kind of money, but he has a responsibility to get his sister married in 1 year. So he obviously cannot invest into equities. And if you're talking about 100 minus age, so 70% cannot go into equities. So the answer to this question is, you need to basically look at what specifics are, what are your own individual specifics.
On that note, it's time for a very short break. You're watching NSE FinWiz powered by CNBC TV 18. We'll be right back.